Okay, so let's talk about a future contract that really is not like a fast-paced moving market. Especially if you're a beginner trader, maybe you're looking for something that has, has a slower pace, that you can get into a trade, and the market tends to move in the direction in which it, is selling or setting its course. And you don't have a lot of erratic movement. Now, I'll trade the NASDAQ, and I could trade pretty much any market because it's all centered around market structure and price action. And that's, I always talk about that key term, the concept, market structure. You have to master that if you really want to make it in this business. Now, this future contract that I'm going to, introduce you to, which is gold, is GC if you want to trade the E-mini, or if you want to trade like the micros, which I highly recommend for anyone who's interested in starting off in the future markets, trading the micro gold. That's MGC. I believe that's what it is, the symbol. I'll show it to you on Ninjatrader for all those that, use Ninjatrader as a broker of choice. Okay. They do have some of the lowest commission rates in the industry. I will say that, even though I don't primarily use them because I've stuck with my broker since the inception of when I first started trading. But NinjaTrader, if I could, if I was to make a switch in the future, it would definitely be going to NinjaTrader as a full-on brokeraging service, because I use NinjaTrader as my trading platform, right? So it makes sense. So when it comes to the micro gold futures, again, I'm going to show you the margins on that here in a minute over on their site. But I simply just use the same strategy that I trade, say, for example, the ES, or the NASDAQ future, or any other market within the, the future markets. I could trade them. And it's all centered around supply and demand. But what I'm primarily doing is, marking up my higher base and lower base chart. Now, with the gold commodity market, okay, like either the GC or the MGC, which I'm going to talk about that, because I really believe that people who starting off should trade the micros, especially until you get your footing in the door and you really build up a consistent basis of profitability over time. And you're doing yourself a favor, because, in the long run, it helps to see, really test you to see, okay, am I consistently profitable? If I am, and you can trade the micros, you're not really leveraging a whole lot in the market. Anytime you can build up even a small account, or even if you have the capital to start moving over to some of the larger markets like GC, okay? Now, there's a big difference in margin amounts, especially, and I'm going to show you that from just trading as per contract now, trading the GC or the MGC, all right? So this is a very good market, again, because gold tends to move in the direction in which it is trending in. So we're going to look at some examples here, just like, for example, yesterday's trading session, because there was the market was making some beautiful setups on key pullbacks to just, several areas of demand pushing to the upside. And it doesn't have that, push up a few times, pull back, and then start changing direction like the NASDAQ. The NASDAQ kind of moves all over the place. I know whipsaws, and a lot of people have, a hard time reading structure because it's making multiple moves. But the thing about the NASDAQ, you're getting multiple setups, whether you're getting, 2 or 3 demand setups, 2 or 3 supply setups. It all depends. Now, sometimes it's just trending in one direction. And, like today, for example, it was moving to the upside, but there was still some good movement on the NASDAQ futures and the MNQ, which is the micro NASDAQ. So let's look into this a little further. If we look at Friday's trading session, or even Sunday going to, Friday's trading session and Sunday going to Monday, we can see the market starting to turn back around on the gold market, right? And we can see since last Friday, it's just pushed to the upside, right? Trending in one solid direction. And now it's kind of pulling back. So it's interesting to see what it's going to do if we're going to make a lower high and then come down and maybe tap this area of demand right here and, maybe push lower now. But it's probably looks like it may try to fill these gaps coming back down. Not sure. It'll be more of a telltale sign when we, if we make this lower high right here, if we're going to come down and take out this low and then test these areas here. But what I'm trying to get you to see is that if you see how it's trending very nicely in one particular direction, I actually took a trade yesterday on this pullback right here on this area of demand. I saw it making these area of liquidity. There was a high here, a high here. It pushed right up. It made a run here to the upside, pullback. Small little area of demand was created right here. And on this pullback right here, I saw these equal highs here. And I said, okay, it's probably going to come down here and want to try to push higher and take out these highs, and possibly even higher and take out these highs here. So wherever you have equal highs at, and as you can see, that's what it did. It pushed up, pulled back, broke, took out these highs here, came back, another demand area, pushed up and broke and took out these highs here. So the market loves to trend in one direction for a period of time, especially if you're moving from the pre-market session into the New York or the open of the US session. It's going to kind of follow suit. Now, the thing about gold, I'm going to tell you this right now, the best opportunities in which I can tell you are going to be between the hours of 7:30 Eastern time and 10:30 Eastern time, because that's when it's kind of making its move, unless you may be trading around London session as well. But about 10:30 Eastern time is going to be the cutoff in most instances, and that's when it starts to kind of really slow down, all right? And this, again, is a real good market or contract to really make money, all right? You only really need to get into one good solid gold trade, especially if you're trading the full-on GC, the E-mini. The MGC, the micro gold market, you're going to have to either trade more contracts or kind of, go for a bigger runner if you're trying to make, a certain amount of money. If you're just trying to make a few $100s a day trading the micros, you can definitely do that with gold, okay? Trading multiple contracts on the micro side, okay? So again, that's the reason why I'm introducing or talking about the gold market, because I've been trading. I talked about it towards the end of last year that I've been kind of, looking at it and taking interest in trading. I've had the charts up for a while, just kind of been looking at the market, but I really started trading it more so this year than I ever have. And I've been, normally trading maybe a couple times a week on gold. I'll say it like that. All right. So let's take a look here. So if you take a look here, like I said yesterday, you can see with the market, it was, basically coming out of Friday, we saw the market had a high, higher low, and it broke structure above this area and this area here to the upside. Came back. This is a demand area here. It pulled back to it pretty much, I believe, Monday. The opening of the Sunday night going into Monday session right here, and the market rejected off of it. It pushed higher and it took out, structure, took out liquidity to the top end here. So then it pushed up, pulled back, broke higher, took out this high here. So at this point here, we're in between a high and a low right here. And you have to understand that if the market pulls back and it doesn't take out, say, any minor area structure within the leg here, right here, coming back down, then it's probably going to reject at a demand zone and keep pushing higher. And that's what it did. Each time it made a new demand zone, it tapped it, pushed higher, pulled back, okay, right here, tapped another one and pushed higher, taking out structure above here as well. So we're taking out this area here, and this is liquidity that is running to the upside. So we got another pullback to a key area of demand right here. Then what does it do? It pushes up right here, okay, takes out the most recent high that it made or came off of right here on the pullback right here, and it broke above this area here. So it broke above another area of liquidity right here and structure above this area here to the upside. Came back right here. What did it do? It pulled back to another area of demand right here. And then we broke higher at the close of yesterday's trading session into the overnight session and took out all these areas here, including this area up here, breaking through all this area structure back to the upside here. Just a beautiful area as the market in the overnight session continued pushing higher and into today's session before the market opened up. Now, all it did after that, after the opening pretty much, was come down. It made this pullback right here. And this is where it's like, okay, what are we going to do now? Because now we're still in between this low that it had here and this high up here, but we haven't broken any structure to the downside yet. But right now, all it did was make a low, and we may be making a lower high to push lower. Don't know yet. We can reject any given point and then come back up here and take out the high again, and then it'd be another area where it's breaking structure back to the upside just as well. So just be very mindful. But this is a great market to trade because it tends to trend or move into the direction, especially pre-market, right into the beginning of the U.S. session. So if you can find one good quality setup, whether it's a supply or demand setup, it's pretty much going to be golden if you know how to hold it. Now, the way I trade is, again, marking up multi-chart confluence is a type of strategy that I use, meaning I mark up my higher base chart first, whether it's a supply zone or demand zone. In this case here, these would be areas of demand off the higher base chart. So I'll mark up my higher base demand zones. Those are areas of aggressive buying, supply and demand zones. If I'm going long, okay, if it's going short, if I'm interested in going short, then I'll be looking for supply areas where there's aggressive selling at, all right? And so I'll mark the zone up, and then I'll move down to a lower base chart to look for a more refined entry point or a smaller zone resting on the inside of the larger chart zone. That's all it is, okay? So if you come across the channel and your first time viewing, you're a beginner, spend some time watching the video content and you should be able to grasp the strategy, because it's really not anything that's too complex. It's pretty simplistic, but you know, you're going to have to watch the video content and take notes. Now, if you want more insight about setups that I take, the types of trades that I take, that's where you can become an elite channel supporter. It's very inexpensive. It's only $6.99 a month. That's all, $6.99 a month. Now, most of you probably spend more than that on price of a cup of coffee or whatever you may spend your money on a daily basis. Okay, you know, whether it's lunch or breakfast, whatever it may be, just think about something that could be pennies on the dollar on a day that could possibly change your life. I can't make any guarantees because I don't know, and I can't say you're going to be able to read the market or see the market the same way I do. Okay, but in time, you know, if you understand structure, market structure, and you can master that, then you can start looking for setups just like this. And that's why if you become part of the Elite Channel Supporter Group, you know, you'll receive the trade breakdowns. These are trades that I post over on our Discord community. And by the way, if you're interested in joining the Discord, it is free. The link, the first link down in the description is the Discord link. The second one is to become an Elite Channel Supporter. If you click on that and choose to become one, the second tier for $6.99 is the one you want to join, because you'll get all the trade breakdown videos where I'll walk you through, and there are tons of those videos to where these are the same trades that I've taken and posted over on Discord. That's where I'll walk you through the trade setups so you can grasp an understanding of these type setups, okay? So you can look for them yourself and take similar trades yourself. But you also get the market structure video that I did that's very valuable in content. And it should definitely help you and point you in the right direction and give you some insight when it comes to market structure. But plus, you also get the video playlist. So I just want to share that with you. Now, let's jump over to the site on Ninjatrader that I wanted to show you right quick. If I can pull it up, let me do this. Okay. And to show you the margins right quick for anyone that may be interested in trading gold, because I know I've been seeing some questions over in the Discord and people have been kind of, you know, sending me DMs. Now, gold, this is Ninjatrader's margins. It says margins for available markets and contracts. This is where you can find the margins for, you know, whatever it may be on whatever exchange. The gold trades on the COMEX. So right here, you see this is the E-mini version of it, the full-on E-mini. Their day trading margin is $1,000 a contract, which means you have to have $1,000 per contract. I mean, $1,000 in your account per contract. So if you want to trade 2 contracts, $2,000, 3 contracts, $3,000. You know, $4,000. And then the micro, what they call it, the E-micro gold contract, which is the E-mini micro contract, is $200 per contract to trade it. So if you want to trade 4 contracts, 4 contracts, then you're gonna have to have at least $800 in your account to trade 4 contracts. But again, I don't recommend anyone leveraging, you know, putting in, say, $5,000 and trading 5 contracts on gold if you're interested in trading GC, or, you know, trading $800 trading 4 contracts on gold. You know, you want to be able to, I always talk about, you know, trading no more than maybe 10% of your account. Okay, really, be honest with you, when you're trading. So you really need to save up and put money into that account, you know. And you could trade the micro gold. You're just gonna maybe have to put some money in there, you know, to be able to trade it, whatever the case is. Now, if we look at the tick value, I believe is, let me check right quick, right, one moment. Yes, so the tick value for the E-micro or E-mini micro is $1 per tick. Okay, that's pretty much what it is. And there's 10 ticks in every point on the gold. Okay, and for the full-on E-mini, it's $10 a tick. So there's a difference there. You see. So again, it's $1,000 per contract. That's the day trading margin for GC, and $200 per contract for the E-mini micro gold. Okay, so I just want to share that with you guys. Anyone that, you probably already know it, you know, if you're trading or using Ninjatrader, most of you probably are probably trading some of the industry markets. But if you're interested in trading gold, it is a good, solid market to actually trade. It's not one of those fast-paced moving markets, but if you get the structure right and you get the direction right and you can find a quality setup, gold is typically going to move in that direction without much pullback before it takes off in the direction it's supposed to move, okay? So that's all I want to do is share that with you guys. I appreciate each and every one of you that spend time watching the video content. You know, the more you do so, the more you take notes, things will start to click and start to come together. But again, if you really want to get things under ropes, you know, and really understand how to trade the future markets the correct way, it's all going to be surrounding market structure. It's the most single important piece to it all, the binding glue. And that's what I struggle with when I started first trading was that one concept, and it wasn't until I mastered it until things really started to turn around for me. So, but that's all I have, guys. I appreciate, again, you guys watching the videos. If you are not a current subscriber, please take the time to go ahead and sub by clicking that subscribe button down below. Make sure to turn your post notifications on. Click that bell so that you don't miss any of the uploaded content when I drop videos. Outside of that, if you found value in the videos today and the content in which I discussed, please make sure to click that like button for me, that thumbs up button. I appreciate it. And if you're interested in becoming a Discord member, the link is down below. It's free. If you want to become an elite channel supporter, the link is down right below the Discord link. Okay, take care and see you in the next one.